Stocks are down for the day big time. Bonds and gold up. Thank you for your patience. Doing a lot of traveling today, getting this report out late. Thank you also for all your good wishes with me recovering from this sciatic nerve issue. I'm feeling much better today after some good acupuncture and good applied kinesiology. Okay, enough about me. Let's jump into these markets. We see, and a lot of good prayer, we see the S&P 500 down 1.96% for the day. Really, really down. And what do we see just going into the second day? We'll finish the first day and going into the second day on Tuesday. This first day, the weekly candle down strong. And we see the price percent oscillator just jacking down, and the derivative oscillator still losing just a little bit of momentum. But again, remember, our primary indicator is the price percent oscillator, and of course it is slamming down along with the Heikin Ashi candlesticks. So we go from that weekly chart to the 2-day chart, and of course what we see here is again another strong down candle as things continue to move down. Remember, we had that 2-day chart rotate over on the price percent oscillator going down for the 2-day candle ending on Wednesday the 12th, and then of course the prior candle ended on Friday, so the first day of the latest 2-day candle was Monday. It'll complete itself on Tuesday, and we'll continue to watch how things develop. We go from the 2-day, of course, to the 4-hour, and you can see just 1, 2, 3 days of strong down movement. Now, we don't have a pullback yet, so we don't have a jumping in point on all of this down movement. That's what we've been waiting for. Remember, when we have weekly vertical crossovers, much easier to jump in. After that, when you have pullbacks, you have to wait until the 2-day is moving in the same direction as the weekly, and then you have to have that 4-hour crossover in the opposite direction and then back over. Why? Because you don't want to be faked out and get hammered in a loss. Remember, first rule of trading is don't lose money. Second rule of trading, make money. And how do we make money? Again, virtual dollars. We're not a stock calling service. We're an education firm. I want you to practice with us. How do you make virtual dollars? That is by making sure that you are accurately trend following. That's what we do. We don't forecast. We don't guess. We don't gamble. We follow established trends with the rules that we set. So we're going to go from the S&P 500 back to the weekly. I'm going to take a look at the Qs. QQQ, it was down the most for the day, 2.27%. Now, those of you who are new to what we do here, you might be saying, wait a minute, how are these guys talking about jumping into trades? Why would you buy anything that's going down? Because there is an opposite ETF that actually moves in the opposite direction. An example of it with the Qs is PSQ. That is the ProShares short. In other words, as you look at this chart and it's going down, you plug in PSQ and lo and behold, it goes up. It is, again, fascinating, just a little bit more sophisticated, but with ETFs these days, you can actually trade in opposite directions. Pretty cool and very liquid. So let's watch what's going on. And the reason we don't really switch ETFs, we just stick with the ones that we do, is because you can understand that we're talking, when we start talking about something going down and jumping into a trade, we're talking about the inverse, or if you're a little more sophisticated, purchasing a put on that. So let's jump in and see what we have going on. Again, a big strong down candle starting the week. This is just for Monday. And again, a strong down candle. Derivative oscillators losing downward momentum still. Price percent oscillators ticking over, going down. Things are looking interesting there. We go from the weekly to the 2-day, first day of this latest 2-day candle, strong down. And again, crossing over. Can't call that until the end of the day on Tuesday when that candle's has been completely drawn. But that could be a good jumping in point, or at least sets things up for that. Derivative oscillators also flipped over to the negative, which is good to see at the same time. And we go to the 4-hour chart, and of course it crossed over back on the 14th. So we're waiting to see if indeed there's a pullback at some point where it goes in the opposite direction and then back over so we can jump in. But we do see strong down movement underway. So we'll continue to watch and see what we have set up for us in stocks and just how long this new down movement's going to go. Remember, things bottomed out before somewhere around the 157 mark. They hit over the course of the day down to 156.17. So just keep your eye on things and see if indeed that market's going to continue to move down. We'll keep our eye on both the S&P and the NASDAQ 100 as represented by QQQ. Next we go to bonds. Bonds up for the day 0.53%. We look at that weekly chart, and of course we're going into right now the 6th week of up movement. If things keep going in that direction, derivative oscillator gaining upward momentum. Price percent oscillator, of course, crossed over going up back on the week ending Friday the 30th of November, continuing to move up, it appears strongly. We go from the weekly to the 2-day, and we again are trying to watch and see if things are topping out. Looks like they're continuing to move up. We look at the highest high back on the 6th. That was the 2-day candle on the 6th, and we can see things somewhere around the 119.20 mark, and over the course of the day things went up to 119.30. So things keep pushing up. Just wanted to make sure they weren't topping out. Derivative oscillator losing momentum. That price percent oscillator, however, still moving up. We'll see how this candle finishes when it finishes drawing, as a 2-day candle does after 2 days, just the first day of the latest one. So again, things looking up nicely, and we go to the 4-hour chart, and of course what we are waiting to have happen, since we have the 2-day and the weekly and confirmed up moves, we have a pullback underway. We're talking about waiting for one of those, of course, in the opposite direction, the S&P and the NASDAQ 100. What we see happening on bonds is the pullback is underway, and when we have that crossover going up, that can be your trigger for jumping in on that 4-hour chart into continued up moves, if indeed the market does that. So keep your eye on the prize and be ready to pull the trigger on a practice trade on an up move on TLT if that occurs. So mark that down in your daily market worksheet. If you're keeping one of those, which you ought to be if you want to supercharge your training, those are available for free, the PDFs, in the show notes every day at both the YouTube channel and, of course, at chartingwealth.com. And if you're a subscriber to our newsletter, which is absolutely free, you can sign up at chartingwealth.com. You'll see the PDF link there in the show notes. So we're going to go to our last chart now. We go back to the weekly, and we go to gold. Gold up the most for the day, 0.69%. Now, gold is in a confirmed up move on the weekly chart since all the way back in October. And the 2-day chart, we'll get to that in just a minute, but we can see the 3rd week of up movement in gold. And again, the same kind of thing to watch for. Is gold topping out here? Hit its high back on the week ending December the 7th, and the high was 118.23. We look today 118.03, so it's not hit as high as it was back then. So just keep your eye on things. You don't want to jump into something that's topping out, but the derivative oscillator is gaining upward momentum, price percent oscillator heading up. We go from the weekly to the 2-day chart. What do we see there? Again, you can see some of that potential topping. We do see the price percent oscillator heading up. First day of this latest 2-day candle. Derivative oscillator still losing upward momentum. We have a green candle that's drawing, so we'll see how that finishes up. So again, we've got both the 2-day and the weekly moving up. We go to the 4-hour chart. What do we see there? Well, again, potentially setting up for a crossover going up. If indeed that does occur, it can give you a jumping in point. Now, the derivative oscillator is still decidedly negative, so maybe that will lose momentum. We always like to see things cross over at the same time. That is, the price percent oscillator and the derivative oscillator cross over in the same direction at the same time. So we'll see. Keep your eye now. So Think about the week as it develops. Watch gold for a crossover going up and a potential practice trade along with TLT, 20-year bonds. Thank you again for your patience as we get into these holiday seasons with all the travel underway and also with this injury that I am recovering from. Appreciate all your good wishes. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.